Hi guys, welcome back to Tax Q&A. Lately, we have been getting a ton of questions on Twitter about ITR filing this year. So in this video, we are answering some of the most asked ones. Let's take them on. Pranshu says, has ITR filing started for AY 25-26 yet? Or are we still waiting for some updates? Great question, and something a lot of you have been asking. So yes, ITR filing is officially started, but not for everyone just yet. The Income Tax Department has released the e-filing utilities for ITR 1 and ITR 4. So if you're a salaried individual or have presumptive income, you can go ahead and start filing now. But if you have got capital gains, income from foreign sources or business income, you'll probably need ITR 2 or ITR 3, and they are not live yet. We're expecting them to be out in 2 to 3 weeks and we'll keep you updated. Diti asks, has the ITR filing deadline been extended this year? What's the last date for AY 25-26? Also, what about the due date in case audit is applicable? Okay, so the deadline to file ITR for most individual taxpayers like us is 31st July of the assessment year. That means for income earned between 1st April 24 to 31st March 25, the filing deadline would be 31st July 2025. But we are running a little late this year. Normally, the e-filing utilities for all the ITR forms are released in April itself, but that has not happened. That's why the government has given us some breathing room by extending the deadline to 15th September 2025. As for those of you for whom audit is applicable, like businesses or professionals crossing the audit threshold, the deadline to file ITR is 31st October, and there's no announcement on this being extended so far. Harshit is asking, is it okay if I don't file ITR because my income is below the basic exemption limit? So technically, yes. If your total income is below the basic exemption limit, you're not legally required to file an ITR. But I would still suggest filing your ITR because it's more than just a tax report. It serves as a proof of income when applying for loans or visas, and it lets you claim any excess TDS that may have been deducted. Plus, it's a good personal finance habit to build, even if there's no tax. Khushi says, my total income is under 12 lakh, so I do not have any tax liability. Am I right? If yes, do I still need to file ITR? Okay, let's clarify this, because it's a common confusion this year. We're currently filing taxes for FY 24-25, which is for incomes earned between 1st April 24 and 31st March 25. For this period, the tax rebate under new regime is only up to 7 lakhs. So if your income is around 12 lakh, it's not tax-free yet. And the 12 lakh figure announced during Budget 25 this year comes into effect from FY 25-26, that is starting 1st April 2025. So when we file our ITRs next year, that's when we won't pay any taxes on slab rate incomes up to 12 lakh under new regime. Also, not having any tax liability does not mean you are not required to file taxes. The rule is simple. If your income is above the basic exemption limit, it's mandatory to file ITR. Charu asks, I earn from salary, freelancing and some stock trading. Do I need to file different ITRs for each source? Or is one return enough? No, you don't need to file separate ITRs for each income source. In fact, you can report all your incomes in a single return. The key is to pick the correct ITR form that covers all the income types. For example, if you earn salary and short-term capital gains from stocks, you will need ITR 2. If you're doing freelancing or consulting, that's considered business income. So you would use ITR 3 or ITR 4 if you opt for presumptive taxation. We have put together a simple guide to help you match the right ITR form with your income sources. You can use it to figure out which one applies to you. Shubh wants to know, can I file my ITR by myself or is it safer to do it through a CA? Honestly, it depends on your comfort level. Some people prefer having a CA to do it for them, while others like to be hands-on with their finances to understand each and every aspect of their income in detail. So the DIY route is better in that case. Now you can either file directly on the income tax portal or use platforms like Quicko that make the tax filing process easy and jargon-free. Shreya is asking, my company deducted TDS as per the new tax regime, but I want to opt for the old regime. Is that still possible now? Yes, it is. So here's how it works. At the start of the financial year, your employer asks which tax regime you would prefer, and they deduct TDS accordingly. But that's not your final choice. At the time of filing your ITR, you can choose whichever regime works better for you. Even if your employer deducted TDS under the new regime, you can still switch back to the old regime while filing and claim a refund if extra tax was deducted. And there's one thing to keep in mind. To opt for the old regime, you need to file Form 10 IEA along with your return. But if you're filing ITR 1 or ITR 2, you can switch between regimes without that form. Devarsh says, saw a bunch of posts saying ITR forms have changed this year. How does it affect us? Yes, this year there have been some notable updates in the ITR forms and they might affect how you report your income. Let me break it down quickly. First, ITR 1 and ITR 4 now allow reporting of long-term capital gains. That's new because earlier having capital gains meant either ITR 2 or 3. But this year onwards, if you have long-term capital gains up to 1.25 lakh under section 112A, you can continue with the simpler ITR 1 or ITR 4 forms, which definitely makes it easy for small taxpayers. Second, if you have sold capital assets in last FI like stocks, property or mutual funds, you now need to mention the exact date of sale. Why? Because the government changed the capital gains tax rates for most assets on 23rd July 2024. And depending on whether you sold an asset before or on or after the union budget date, the tax rates will differ. For example, in case of stocks, short-term capital gains are taxed at 15% if sold before 23rd July 2024, but if sold after that, the rate goes up to 20%. Here's a quick table that breaks it down. And third, for those choosing the old regime, expect a bit more work. You will now be required to report more details while claiming deductions like section-wise breakdowns, limits, and proof. There are a bunch of other changes and we have covered them in our recent tax Q&A post. You can check it out. I'll put the link in description. Shweta is asking, I changed job this year and now I'm a bit confused. I don't know how to add up income from both companies to calculate my total tax. Is there an easy way to do it? Totally fair. Job changes mid-year can make ITR filing a bit tricky. But it is actually simpler than it looks. Here's what you need to do. Ask for Form 16 from all the employers you have worked with during the financial year. Add up the total income from each Form 16, that's your combined taxable income. Now calculate your total tax liability based on the combined figure. Then subtract the TDS already deducted by each employer. If there's any shortfall, you will need to pay the remaining tax while filing. And if that sounds like too much math, you can just upload all your Form 16s on Quicko and we'll autofill everything for you. Sahil says, my company did not issue Form 16 because there was no TDS on my salary. Can I file my ITR without it as I want to get it done on time? Yes, absolutely. Form 16 is helpful but not mandatory to file your ITR. Simply check your salary slips or the HRMS portal to find your salary details. Calculate your gross income for the year, and if you're filing under the old regime, take note of all the deductions and exemptions too. Once you've got those details, you're good to go. Just fill them in while filing your return. Keval has asked, all I had were F&O losses this year. Do I still need to file an ITR or can I skip it since there is no profit? So technically, you can skip it if your total income is below the basic exemption limit and there's no refund due. But honestly, I would not recommend it. Here's why. When you file your return and report those F&O losses, you're allowed to set them off against other incomes this year and even carry them forward for up to 8 years to adjust against future profits. So even though you did not make a profit this year, reporting losses can save you some taxes down the road. Archie says, I'm planning to carry forward my F&O or intraday losses this year. Do I need to do tax audit for this? So this is one of the most common myths around trading. Just because you have F&O or intraday losses does not mean you need to get a tax audit done. What actually matters is your turnover, not your profit or loss. So here's the rule. For F&O or intraday, which is considered business income, a tax audit is not required if your total trading turnover is under 10 crores. Or you are not opting out of the presumptive taxation scheme within 5 years of opting in. Siddharth is asking, I have earned some agricultural income this year and my dad also gave me gold jewelry. Do I need to mention them in the ITR even when they are tax-free? Yes, even if they are exempt from tax, you still need to disclose them. There's a specific section in the ITR called Schedule Exempt Income, and that's where you report things like gifts from family, agricultural income, and life insurance payouts. These are not added to your taxable income and you won't pay any tax on them. But disclosure is still important, so you don't get those unwanted tax notices. Ritika wants to know, what happens if I made a mistake while filing ITR? Happens more often than you think, especially with the number of details we have to fill in and the rush near the deadline. But there are a couple of options to fix them. First, if you have not e-verified your ITR yet, you can simply discard the return and file a fresh one. Just log into the e-filing portal, go to e-file, income tax returns, e-verify return and discard. Second, if you have already e-verified, no problem. You can file a revised return. It overrides your original one and you can fix whatever went wrong. Just remember, you will need to e-verify the revised return again within 30 days. And the last day to revise your return is 31st December of the assessment year. Yash says, heard people get tax notices even for small mistakes like missing bank interest. Is that true? What else should I be careful about? Unfortunately, yes. Even small omissions can trigger notices these days. One of the most common mistakes we have seen over the years is people not reporting all the details mentioned in the AIS and Form 26 AS. These two documents have pretty much everything about your finances. Interest from savings accounts, FD interest, stock trades, TDS, you name it. If you leave something out that shows up here, it can either delay your refund or lead to a mismatch notice. Another common one is folks not reporting foreign assets or unlisted shares in the ITR. If you've got ESOPs in a foreign company or invested in a startup that is not listed yet, you need to disclose them in your ITR even if you have not sold them. There are many more mistakes you should absolutely avoid, and we have covered them in this thread on tax Q&A. The bottom line is stay calm and take some time to carefully review all your documents. If you have income from investments or assets beyond just salary and FDs, make sure to report them and get your calculations right. It will save you a lot of headache later. And with that, it's a wrap. If Google search is too much work for you, Quora is full of opinions, and ChatGPT is not accurate enough, then you should check out Tax Q&A, where you can toss questions and our tax experts give quality answers. And hey, don't forget to like and subscribe so you do not miss out on what's coming next. See you in the next one.